Welcome to Bro Billionaire. This is RP here recording video on 21st of August 2022. We will be doing Nifty's analysis based on indicators, price action. Then we'll check the Elliott Wave. After that, we'll do the option chain based analysis. So let's check the previous week's analysis. This is the video from the previous week, which we published on 13th of August. There we mentioned Nifty could make top near 18,040 and we could start the dip towards 15k, and this will be a double zigzag correction or a complex correction. So 265 views for that video, and we also added the thumbnail that will Nifty kiss 18k. It did kiss the 18k. It made a high of 17,992. So yeah, it missed 18k by small margin and started the drop. So thanks for all who added the comments and hit the like button. I would expect this video to have 50 likes at least, and do make sure to add the comments. So moving forward, we also mentioned based on indicators that, so this is indicators based analysis now. Here on indicators front, we mentioned that Nifty, if faces resistance near 17,000, like Nifty could face resistance near 17,800, and if it crosses that, it will head towards 18,000. So yeah, it did face the resistance at 18,000 and then gave red Marubozu candle covering the previous three candles, filling the gap on this between these two candles. So now the Nifty has started the dip. So the 13 EMA is coming around 17,550. So 17,600 could be the support. It could slightly go up and Nifty could drop towards this, then give a bounce and then drop on the downside. And on the downside, it could take support on 48 EMA as per the indicators. So 48 EMA could travel a little bit up as Nifty gives the move. And Nifty is coming on the downside as far as RSI is considered. So it is coming from overbought zone to downside. It still has to come below 70, then only we can say that it has come down from the overbought region. Aron is still showing the bullish signal. It might take a couple of more candles for Aron to change the direction. As of now, it is still very bullish. So that's on the indicator front. Let's check the main part of this video, Elliott Wave Analysis. So in a last week, we discussed the bearish cases. So this week, let's also discuss the bullish case as well, as MACD has broken the previous swings high. After COVID drop, you can see here, this was the swing high that MACD had made, that has been broken by this rally. So in that case, if my wave count is wrong, which I'm considering that we are already in a wave 2. So we are considering here wave 1 finished at 18,600 and we are in a still wave 2. If this wave count is wrong, and let's say if this is wave 3 and this is wave 4, which I doubt, then in that case we'll head towards minimum 0.3 to Fibonacci or 0.6 Fibonacci. I'm more hopeful in that case to head towards 2200. So even if 18,600 is broken, then we are going some more points toward 22,000. So this is the level that we need to watch for once it breaks 18,600. So no need to worry, we can still wait. It didn't break that level. So even if it goes slightly above and does the breakout just like the Bank Nifty had given the breakout of this particular swing, right? Similar swing is present on the Bank Nifty, but it has broken that swing. Nifty had not broken that. This swing is 18,115. Nifty had not broken that. And if it is going still up, if it breaks this 18,600, there are a lot other stocks to catch up for 22,000. So we can wait, no need to rush. There are no negative news as well, and there are no big positive news as well as of now in the market. So it can be a 50-50 game. It can go either up or down as well. So this was the bullish target if the Nifty is to break 18,605. So what are our bearish targets? Let's check that. And what are the bearish cases that we discussed? So this is the way that we discussed last time. that Nifty is going to fail in the form of Y wave. So this was X wave, which can be a zigzag correction or it can be a complex correction, and X wave, a connecting wave, and then Y wave as A, B, C on the downside. So C wave will be 5 wave moves, that's what we discussed, and it is going to go towards 15,000 minimum. So when you plot Fibonacci from the lower end, from this point to this point, you get 236 Fibonacci and 0.38 Fibonacci. So this number is yet to come. This has already been achieved. So 0.32 can also come in Y wave. So we have to be ready. By the way, this is just an educational video. These levels may come or may not come, but as if my analysis is correct, we should at least head towards 15,000. So let's adjust this Fibonacci. So when I plot the Fibonacci extension on X, end of X, then end of A and end of B, I'll get 15,000. So let me adjust this, because instead of 18,040, it looks to have finished at 17,992. So let me adjust this. Yeah, okay. So once I adjust this, I get the level of 15,060. So if it has to come, wave C will travel minimum 100% of wave A, that is 15,060. If it goes beyond that, it is coming towards 1.38 Fibonacci, that is 14,000, somewhere near 14,000. But I am hoping that it will respect this channel. It will come to the channel and it will bounce on the upside. So that will mark the beginning of the new wave. So we are hoping for a new low as per this bearish wave count. So this is the wave count that we discussed. So let's remove this one and let's discuss the current scenario. So current scenario also we discussed in previous charts, that on 10th August that we are heading towards 18,040 minimum. We were at that time near 17,523. Earlier on 31st of July, we mentioned that 17,625 it will hit. After this, if it goes beyond this, we will head for next extension, which was 18,040. So now current situation, you can see here, we have marked the wave count as wave A, B, and wave C was in progress of B wave. So 1, 2, 3, 4 and fifth wave was in progress. So now fifth wave looks to be finished, as it has come down of this yellow channel. So it has come out of this yellow channel. Let me switch to 1 hour chart. It will give clarity on the moves. So here you can see it has come out of that. It has come out of that yellow channel, and now it's in another channel, which I just deleted, right? So this is the channel of fifth wave. So it is about to break that channel. So internally, this wave 5 is looking complex. Either it could be an ending diagonal with 1, 2, with A, B and C wave 1, 2, right? 3, 4 and 5 completed here. So we had marked that. Let me bring that chart as well. New update. Okay, so this can be a wave count of impulse structure with 1, 2, 3, 4 and fifth finished as an ending diagonal with 1, 2, 3, 4 moves, right? 1, 2, 3, 4 and 5. This can be an ending diagonal as a fifth of fifth wave, or it can be a different figure altogether from the lows of this point. In that case, let's hide this and let's check that wave count. Once we check that wave count, we can see here it could be wave count like this, right? So this could be wave A, this could be wave B, and this could be wave C, which will be a biggest wave in an ending diagonal 1, 2. Though there is a no overlapping, this is looking at 3-3 wave structure, as well as it's a wedge-like structure. So we can still assume this is as an ending diagonal pattern. So 1, 2, then again A, B, and 1, 2, 3, 4, 5, right? Sorry, 1, 2, 3, 4, 5, right? So this will be wave 3, wave 4 here, and wave 5 finished here. So this can be another way to represent the ending diagonal beginning the low of the fourth wave. So here at least we know that like even though the wave count can be different as per our consideration, we can consider here the wave 5 ended since it made the bearish engulfing candle, and also it is broken the orange channel. It is about to take support at this purple channel or violet channel, and it can bounce back. So let's check the 15-minute chart for next day view. So for next day, what we can assume is wave 1, 2 finished here. Third wave was a sharp wave. I had given the signal on our Telegram channel that we have started the drop as soon as it moved below 17,912, or even it broken the 17,852 low. So these were the signals. After that, we got almost 150 points towards 17,710, right? So 150 points are also sufficient on an intraday basis. So this is wave 1, wave 1, 2. This also looks like a triangle, but that doesn't look to be a case. But 1, 2 we can consider. Then third wave could be finished here, and fourth wave finished here, and fifth wave finished here. So this can be 3, 4, and 5. One impulse completed here, and it can be a pullback wave towards 0.61 Fibonacci or 17,822. So next session, if it opens small gap up, okay, if it opens small gap up, so this is the A wave stop. If it breaks this level 17,805, we can assume that it is going 80 points more towards 17,880. We should face rejection from here if it's a zigzag correction like this, right? So A, B, and C wave. If it's a zigzag correction, we should face a rejection from this level. Then only we can say that we are in a bigger fall. This will be wave 1, this will be wave 2, and we will have a gap down on Tuesday in that case. So this is more bearish count. What if the fifth wave has not yet ended? It will either open small gap down, okay? In that case, our wave count will change. So yeah, 1, 2, in that case, this could be, this doesn't look to be a triangle, but it can be a running triangle as well. So running triangle can be like this. So in that case, this will be wave A, B, C, D, and E. So in that case, if it opens flat and faces the resistance here, we need to watch for break of this trend line to consider the dip. So 17,726, if it breaks, if it goes like this and it breaks this, then we will head more lower. In that case, our levels will be for 5 wave will be when you plot Fibonacci on these points, right? So if you plot that, so wave 5 targets are 17,658. If this is the case of fourth wave, then 17,658 and 17,550 can be the levels to look for. But this doesn't look to be a good case. So because it is going way off the impulse pattern, right? So impulse usually do not have this much of longer consolidation in the fourth wave. It is going way too off from the main drop, right? So in that case, this I'm having a little bit doubt, but it can happen. So that's all on the Elliott wave front for the next session. So let's check the option chain. In option chain, we can clearly see 18,000 is the biggest resistance for this expiry. This is monthly expiry, right? So this is the biggest number, 115 lakh call open interest, which is the biggest resistance for this expiry, 18,000. And then on the downside, support is at 17,500, which is the biggest number on the support side now, right? So there is no bigger number than 49 or 50 lakh put open interest. So this is the biggest number here. So yeah, this is the biggest number, 17,500, and after that 17,600 is a second major support. So range for this expiry is anyway 17,500 to 18,000. So Nifty could trade in this range, and after this expiry we could head a little bit lower. Let's see if the range changes. So second most bigger resistance is 17,900. So option chain also supports our view. If it has to pull back, it will face resistance near 17,880 and it should drop on the downside. So option chain just gives the range as of now, and there are no much details that we can check here. So anyway, there is a huge call writing that has happened. You can see here 500%, 200% rise because of the red Marubozu. Here there was 78% rise, but this still number was already a big. So this number is also carrying a big importance. So you can see here there was on 17,750, 1000% writing was there, though the number is less, hence you see the bigger percentage. But there was significant call writing and put writers exited their positions, some of the put writers, but not big. So a pullback can be expected on Monday. So that's how we can read the option chain. Do let me know in the comments if you have more doubts. Thank you. Have a good day. Bye-bye.